This is a classic sentiment-driven snapback justified as a relief after some pain and supported by some genuine data and positive comments by President Trump. But the speed and the magnitude suggest the markets are getting ahead of themselves on the most optimistic scenario, as you just said, which is cheap energy, ceasefire first, then cheap energy, and no second round effects. Volatility is likely to stay elevated until there's a tangible progress on the ground or in the negotiations. I think that the next 24 to 48 hours will be telling. If the best case scenario materializes, the rally will continue. If not, we expect some correction.
Meanwhile, South Korea's exports hit a new record, with semiconductors leading the way despite the ongoing Middle East crisis. Does this signal a sustained recovery in global tech demand, or is this just a cyclical peak?
I think the ongoing Middle East crisis presents significant risks, which is raising fears on supply shortages, specifically for critical raw material like helium, which is crucial for chip manufacturing. The evidence so far show strong structural AI-powered demand, specifically for chips which are used in AI servers and data centers. Yes, there are some risks, specifically on overcapacity and geopolitics, but right now the momentum is accelerating and not peaking.
And gold plunged more than 13% last month as we saw a stronger dollar. But with the prospect of a ceasefire, does the outlook from here only point upwards?
I think the gold is pricing the economic consequences and not the geopolitical headlines. Gold is an unyielding asset. As U.S. Treasury yields are rising, this is typically negative for gold. As long as energy prices are elevated and inflation expectations are rising, Treasury yields or real yields are set to rise, and this is also negative for gold. This sounds counterintuitive because gold usually traditionally plays the safe haven role in geopolitical risks. But now the story is not geopolitics, it's inflation transmission from energy into rates, and that macro theme is outweighing the geopolitical bid. However, if the conflict persists long enough to destabilize inflation expectations, we expect, of course, real yields to go down and probably negative, which could help gold significantly, similar to what we saw in the 1970s.
Now, among all this uncertainty, the US dollar has emerged as the safe haven, lingering at around 99.8 now. Why are investors pouring their money into the USD instead of other options like gold, as you mentioned earlier?
I think the key in the US is the liquidity and the depth, which are unmatched. And as real yields are rising, this is significantly positive for gold. As long as inflation expectations are anchored, I think the most beneficial will be dollar. Once inflation expectations become unanchored, then this will help gold significantly.